Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of these massive financial reports. And let me tell you, this one is a real ride, get ready, because BLACKBOXSTOCKS INC has just dropped their latest quarterly report, and it brings some interesting news along for the journey. We are diving into BLACKBOXSTOCKS INC's quarterly report for the period ending the 30th of September, 2025. As a financial technology company, they offer real-time analytics and news for stock and options traders. Think of it as a supercharged toolkit for investors, combining predictive technology with social media features. It is like having a crystal ball for the stock market, all wrapped up in a subscription service. Let us peek at the balance sheet to see where BLACKBOXSTOCKS stands. As of the 30th of September 2025, their total assets are just over $8.8 million. That's a decrease from nearly $9.9 million at the end of 2024. Now, what's causing this dip? Well, a big chunk of it is that the company had a significant note receivable of $1.1 million at the end of 2024, which seems to have been resolved as it's now zero. But we see a dramatic increase in cash going from around $17,000 to over $93,000. That is a big jump in percentage terms, but still a small amount in the grand scheme of things. Now, let's talk about how the company is actually making money, or in this case, losing some. For the 3 months ending the 30th of September 2025, total revenues were around $697,000, a slight increase from about $648,000 in the same period last year. That's a little over a 7.6% jump. However, when we look at the first 9 months of the year, revenues actually dropped. They brought in about $1.8 million for the 9 months ending the 30th of September 2025, compared to almost $2 million for the same period in 2024. That's a decrease of about 9%. The company attributes this to fewer subscribers and slightly lower revenue per user, partly because of some promotional pricing they offered earlier in the year, like a $29.97 monthly special on some of their plans. The cost of generating that revenue, which includes data and news feeds, was about $323,000 for the 3 months ending the 30th of September 2025. That resulted in a gross margin of roughly 53.7%. For the longer 9-month period, the cost of revenues was over $1 million, leading to a gross margin of about 43.6%. This is down from about 49.2% in the prior year, which means they are keeping less money for every dollar of revenue compared to before. The expenses to run the business, like software development, marketing, and general administrative costs, were about $813,000 for the 3 months ending the 30th of September 2025. This is actually a decrease from over $1 million in the same period last year. The company says this is mainly due to lower professional fees and less spending on stock-based compensation. Marketing costs also went down significantly because they are revamping their marketing strategy and rolling out new pricing tiers. Despite trimming some expenses, the company is still operating at a loss. For the 3 months ending the 30th of September 2025, the operating loss was around $439,000. For the 9-month period, the operating loss was over $2.4 million. This is slightly worse than the operating loss of about $2.4 million in the same period of 2024, suggesting that while they cut some operational costs, the drop in revenue and margins had a bigger impact. When you factor in everything else, like interest expenses and financing costs, the net loss for the 3 months ending the 30th of September 2025 was around $721,000. For the 9-month period, the net loss was nearly $2.82 million. This is worse than the net loss of about $2.52 million in the first 9 months of 2024. Now, looking at the stockholders' equity, we see an interesting mix of activity for the 9 months ended the 30th of September 2025. They issued over $3.6 million in stock for cash and to cover financing costs. They also converted about $610,000 of debt into common stock. However, they also reported a net loss of over $1.2 million for this period, which reduces the overall equity. The total stockholders' equity at the end of September 2025 was about $4.78 million, down from roughly $5.39 million at the end of 2024. Let's talk about cash flow. For the first 9 months of 2025, the company used about $2.65 million in operating activities. This is a big jump in cash outflow compared to the roughly $681,000 used in the same period of 2024. The good news is that their financing activities brought in over $2.7 million, primarily from issuing convertible debentures and through their at-the-market offering. This essentially means they raised more money by selling stock and taking on debt than they spent on operations, which is crucial for their survival. Now, a really important note here is about the company's ability to continue operating what bosses call going concern. For the 9 months ending the 30th of September 2025, they had an operating loss of over $2.4 million and a net loss of almost $2.82 million. They used nearly $2.65 million in cash just for operations. With only about $93,000 in cash at the end of September, these conditions create serious doubt about whether they can keep their doors open without more money. They are heavily reliant on the completion of a merger with Realloys Inc. and securing new financing, which is not guaranteed. The company has also entered into financing agreements that are quite complex. They have a senior secured debenture with 5 Narrow Lane LP, or FNL, for up to $2.3 million. They have received about $2.05 million from this, and a portion of it has already been converted into common stock. This debenture is secured by almost all of the company's assets. They also have a convertible note payable related to financing costs, which can also be converted into common stock. There is also a $100,000 note payable to a tech due in July of 2026, which arose from settling some past financial arrangements. Looking at the equity section, we see that the company has been active in issuing shares. For the 9 months ending the 30th of September 2025, they issued shares for consulting services, financing costs, and through the cashless exercise of stock options. They also entered into an AT, the Market Issuance Sales Agreement, which is basically a deal to sell shares of their common stock on the stock market as needed, up to a total of $5.79 million. As of the 15th of October, they had already raised over $1.4 million through this program. When it comes to their employees and executives, they have a stock incentive plan. The company calculated the value of stock options granted using complex models. They also granted restricted common stock shares that vest over time, meaning employees earn them gradually. Interestingly, the company's president and CEO Gust Kepler has advanced them money and also been repaid. At the end of September 2025, there were no outstanding advances due to him, but there were some at the end of 2024. This section details significant upcoming events and potential obligations. Most importantly, on the 10th of March 2025, BlackBoxStocks entered into a merger agreement with Realloys Inc. This deal is structured as a reverse merger where Realloys is essentially the accounting acquirer, and BlackBoxStocks shareholders will likely end up owning a small percentage of the combined company. The idea is that Realloys will bring significant capital. However, the merger is subject to many conditions like SEC approval and NASDAQ listing approval, so it's far from a done deal. They also amended the merger agreement to allow for the market stock offerings up to a certain amount, without impacting the merger share calculations. This is a smart move to raise cash while navigating this complex merger process. Now, let's dive into management's perspective on the company's health. They reiterate the going concern issue, highlighting their losses and reliance on future financing and the Realloys merger. They acknowledge that if the merger or financing doesn't happen, it's a major risk. They are actively trying to secure funds through various means, including their shelf registration statement and the at-the-market agreement. The company also provides EBITDA, which is earnings before interest, taxes, depreciation, and amortization, as a way to show their operational performance without certain non-cash items. For the 3 months ending the 30th of September 2025, their EBITDA was a loss of about $11,000. For the 9-month period, it was a loss of nearly $1.93 million. While this normalizes for some expenses, it still shows a significant operational shortfall. This is where we see their biggest challenge. Cash on hand at the 30th of September 2025 was just over $93,000, a significant increase from the prior year, but still a very small amount. Their cash used in operations for the first 9 months of 2025 was over $2.6 million. They are heavily reliant on the Realloys merger and the related financing, as well as the proceeds from their the market stock sales. One interesting tidbit here is that Gust Kepler, the CEO and president, entered into a trading arrangement for the potential sale of up to 250,000 shares of the company's common stock. This is under Rule 10b-5-1, which is a way for insiders to sell stock without being accused of insider trading, provided certain conditions are met, and sales will only begin after a certain period and disclosure of financial results. So, what's the big picture here for BlackBoxStocks Inc.? It's a company in a precarious financial position, clearly struggling to generate consistent profits. Their main hope for survival and growth seems to rest on the successful completion of the Realloys merger and securing substantial new funding. The significant increase in financing activity shows they are actively trying to keep the lights on by raising capital, but the going concern note is a serious red flag. They are essentially betting big on this merger to turn their fortunes around. The core business of providing trading analytics is sound, but the current financial situation is dire. The company needs to execute its merger and financing plans flawlessly, or its future as an independent entity is highly uncertain. We will be watching very closely how this plays out. Alright, what do you think about BlackBoxStock's financial situation and their merger plans? Do you see them making it through these challenging times? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a like and subscribe to Corporate Decoder for more in-depth looks at company filings. And for more immediate insights and discussions, join our Discord community. The link is in the description. Thanks for watching, and I'll see you next time.